So I want to do a really quick video on how to short the markets, and we're going to keep it really simple. Now we do have some delta neutral LP hedging strategies. If you want more videos on that stuff, do let me know. Remember that you can make money no matter what the markets are doing. Now, obviously, when markets are bullish and things are pumping and things are hitting all-time highs, you're locking in profit, you're moving that profit into stable, and then you can decide what you want to do with it. The simplest way to take advantage of market corrections is when markets do correct, you just buy back lower and you stack and you hold. But if markets are showing that, hey, things are going to keep dropping, or we're definitely in a bearish market, which, by the way, I don't believe we're in a full-out bear market, but maybe you do, or maybe you see Bitcoin going down to 60K or 70K, or looking at ETH and you're saying, hey, we're falling underneath some support lines, and, the next support in your analysis may be 1600 or 1500, and you want to take advantage of that. I'm going to show you one of the simplest ways to do it, which is really kind of step one as well into a delta neutral hedged strategy, which again, just request the video. We can film a ton of content on this stuff. I think people are sometimes only long on everything they hold, and it creates a problem because when markets pull back, they lose a lot of value on their portfolio. And we see this time and time again. When markets are green and things are pumping, very few actually take profit because they think the party will go on forever. Then they take a haircut, and then they get out of the market because they think the pain will never end and the markets are just going to keep free falling, and then they miss all these awesome opportunities. So this is one way that you can short an asset. You could lend your stable over here on Aave, for example. So I've got, $250,000 lent, and if I wanted to, I could borrow, in this instance, let's just say Bitcoin. So I can click borrow. I could borrow, one Bitcoin worth $81,000. Confirm, done. So my debt is one Bitcoin. It's worth $81,000 right now, but my debt is one Bitcoin. So if I repay it, I would go repay, and I repay my one Bitcoin. This is really important. Take note. I am repaying one Bitcoin. But why would I do that? I basically made $0. There's no advantage to doing that. Now, if I just hold on to this Bitcoin, and let's say the price of Bitcoin drops down to $75,000, and it is what it is. I haven't shorted the markets at this moment. Let me know if this is making sense. If I just hold this Bitcoin in my wallet, as you can see, I have one Bitcoin in my wallet, and the price of Bitcoin goes down to $70,000, I haven't lost any money. Because I borrowed one Bitcoin, I would just repay that one Bitcoin, I'd take my $223,000 out, and I'm at the same place I was. I need to convert this Bitcoin into something else, or if I want to go delta neutral, I could also take this, enter a liquidity pool, sell half of it for USDC, and now I'm starting to go short the market. But let's keep this really simple. I could take this Bitcoin, which I have one Bitcoin. I could take that Bitcoin, I could convert it for, let's just say USDC. Let's go one Bitcoin, done. So I'll take one Bitcoin and I'll convert it for $81,000 in USDC. I'm going to prove this. I'm just going to do it for you just to show you how easy this is if you see markets falling and you want to take advantage of it. And again, this builds out on the first step of actually going delta neutral, so isolating market volatility from the fees that you're earning. There we go. So as you can see, I have sold the one BTC for $81,000 of USDC. Now over here on Aave, this is going to go zero any second here once it picks it up. There we go. And you can see I have $81,000 in USDC. Now I could go yield farm with that. I could do whatever I want with it. But get this. If the price of Bitcoin keeps dropping, and let's just say it drops down to $80,000, I may choose to repay that loan. What's cool is I would take only $80,000 of my stablecoin. I would buy back one Bitcoin that's worth $80,000, and then I could repay back that loan. And how much have I made? Let me know in the comments. I would have made $1,556 in this instance. Or when Bitcoin dropped from 100,000 down to 80,000, I would have made $20,000 on my one Bitcoin. Now I'm on purpose using bigger numbers because it's easy to calculate on one Bitcoin, but it just goes to show you there's multiple strategies. This is the simplest of strategies. You can also go delta neutral, and this would be one of the steps in attaining that. Let me know in the comments if you want more videos on that. But the fact is, I'm really excited to keep watching Bitcoin fall here. Now, I'm not saying I'm deploying this strategy now because I don't think we're in a full-out bear market, so I'm not going to be keeping this. I don't want you copying this, but if you are bearish on any of your assets, you can deploy this strategy, and now you're shorting the markets. And as the price of Bitcoin falls, you're excited. You're not waiting for the markets to turn around. There's so many people not doing DeFi because they're waiting for the markets to turn around, and it drives me crazy. The more Bitcoin, if I wake up tomorrow and Bitcoin is $70,000, I'm very excited. I could take $70,000, I could buy one Bitcoin, I could pay back my loan, and I would be left with $11,421. Really, really hope that makes sense. Now, do remember you are paying fees on the exchanges, so you have to factor that into your actual profits, but you get the point. Now, if I really, really want to short the markets, I'm going to be sitting on this for a few weeks. I could also take this $81,000 and I could actually supply it into my lending and make even more on those supplied assets. So now, as you can see, this balance is going to shoot up to $300,000 worth of lent USDC that I'm making 4% on. And if I was short BTC, then I'm obviously waking up excited. Every time the price of BTC drops lower, I've made more money. And I'm not saying to do this now. You're going to have to do your own market research. I'm not shorting much right now. In fact, I'm really excited for the next 3 to 6 months. I think there's a lot of long opportunities. But if I'm wrong, I've got multiple strategies in my back pocket that I can pivot to so I can make money no matter what the markets are doing, and I want you to be able to do the same. This is the stuff we talk about in the UIG, in Fast Track, with clients. We're always developing new strategies, testing new things. And again, we love delivering it on YouTube, but a lot of this content is sometimes weeks, if not months behind what we're actually doing in the UIG and Fast Track. So if you want to stop missing out on market opportunities, if you always feel like you're lagging behind chasing the markets and you want to be within a community and constantly get the latest updates on different strategies or what we see in the markets, then we'd love to have you in our community. But either way, I really hope this video was helpful to you. If it was, like this video, subscribe to this channel, and let me know in the comments what landed for you. And with that said, happy yield farming. Enjoy DeFi. Like really lean in right now. This is where the opportunities are. Every time the markets get volatile and people are getting shaken out, that's when the actual opportunity is. When you adjust it for risk, the lower the market drops, the actually more upside potential you have. And so the lower risk you're taking. And it's wild to me how people wait for things to be green, markets to be pumping, and then they're taking advantage of opportunities, when by then I'm like, yeah, there's still a lot of upside, but you are taking on more risk. So to me, the more red the markets are, the more I start leaning in, and the more I start deploying, and the more I get excited. Really hope that helps. With that said, I'm gonna get out of here. Appreciate you. Peace.